Hey guys, and welcome to the Working Money channel. So I wanted to do a bit of a video on this today about the stock market, gold prices, and how that relates to the cryptocurrency industry. So this article is from yesterday, and XRP_Canada did send that to me. That's XRP_Canada on Twitter. For those of you who aren't following him yet, I suggest you do. He does post out some really great information with regards to the market, you know, XRP and all that jazz. So let's start here. Dow closes little changed after rally back from 589 a 589 point drop. That's right, guys. The Dow dropped 589 points yesterday. Time to call Bearable Guy. Did he have anything to do with this? Probably not. I'm sure it is just a coincidence, guys. Be honest, who is ready to connect those dots? But the Dow Jones Industrial Average did recover the bulk of a nearly 600-point drop on Wednesday as a sharp decline in bond yields stabilized to temper worries over slowing economic growth. The point I'm trying to make here, guys, is that the stock market ain't doing so well right now. So this is the Dow Jones Industrial Average, and as you can see, it's not faring well. This is it on the hourly. Okay, so this starts back from July 31st, and as you can see, over the first week of this month, we've seen nothing but sharp declines. Okay, we have rebounded a little bit here, and it's the same thing with the S&P 500. Okay, it's the same kind of chart. If I look at the NASDAQ, okay, same chart. But what does it mean when the stock market crashes? I saw this on Twitter, this from Ripple Rich, at Rich Ripple on Twitter. Take a look at the countries involved. Gold prices hit an all-time high in these countries. So, historically, what happens when the stock market does crash is that gold does well. People start taking their money out of the stock market, right? Bonds, securities, because they don't feel that there is enough confidence in the economy in order to see that kind of growth. So what do they put it in? They put it in something a little more secure like gold. You know, gold has had a huge history of being a great hedge against the economy because it's a fixed asset, it's a physical product. It is gold. So even if you have gold stock, it's still not the same thing as going to an exchange and actually buying gold bars. I know some people that do that, by the way. The gold market saw massive moves on Monday, breaking record highs in a number of currencies, including the British pound, the Japanese yen, the Canadian and Australian dollars. The yellow metal also saw a massive 3% daily rally in other currencies. The main driver behind the week's move has been the escalating trade tensions between the US and China. And I was just talking about this morning, right? The market isn't so great. There is trade tensions between the US and China, and that's ultimately why we're seeing this market uncertainty. So if we go back to the stock market here, you guys can see this. Here is, again, so let's just go back, S&P 500, right? And even if you go the Dow, all the charts look the same. They're pretty much carbon copies of each other. But when you look at gold, let's look at AU, look at that. Look at that inverse correlation. So the Dow, okay, to gold. Whoops, that's not gold. That's gold. Okay, this is Anglo Gold, Ashanti. We can even go to GL or GOLD. That's gold to the dollar, or GLD. The Spider Gold Trust shares, you can see that they're all going upward, right? Compared to the S&P 500 or the Dow Jones, everything moving downward. So an inverse relationship. After the US President Donald Trump announced 10% tariffs on the remaining $300 billion of Chinese imports, China led the yuan to weaken and rise above 7 against the US dollar for the first time in more than a decade. This is leading to ideas China has thrown in the towel on any trade agreement with the US coming anytime soon. China's central bank appeared to condone the decline in its currency, saying the yuan's fall is a result of US protectionism and that the yuan remains stable. In the past, China's central bank has stepped in to boost the yuan, yet it reached 7 to the dollar. Kitco's senior technical analyst Jim Wyckoff said on Monday, the currency war is playing a big role in gold breaking all-time highs in a number of currencies, said Wyckoff, adding that the yellow metal has room to head higher. Okay, the article goes on, guys. I will link it in the description if you want to read further. We have historically seen gold rise during stock market crashes. Here's some charts down here. What are these? These are, just gold compared to different fiat currencies around the world. So to the Canadian dollar, to the Japanese yen up here, the Australian dollar here, Indian rupee. So we're starting to see a trend here. Okay, the economy is not looking good. And the more and more countries that this affects, the worse it is looking. Now, linking this to the financial crisis of 2007, 2008. Obviously, there were different reasons for that, but A lot of people are suggesting that another liquidity crisis could be looming. So the 2007-2008 financial crisis in review. I won't read this whole thing, but I am going to read a little bit of it. This is from May 9th, 2019. So when Wall Street evangelists started preaching no bailout for you, before the collapse of the British bank Northern Rock, they hardly knew the history would ultimately have the last laugh. With the onset of the global credit crunch and the fall of Northern Rock, August 2007 turned out to be just the starting point for significant financial landslides. Well, guys, it's exactly 12 years later, and we are due for another correction. When you look at this chart, I'm just going to put the S&P 500 on here on the, let's do the weekly, just to kind of give you guys a sense of where we're at. So we've had two major corrections in recent history, this being the dot-com bust, okay, in the early 2000s, and then 2007, 2008, we saw a correction here, okay, and now look at how high we've moved up since then, okay? The market was trying to correct back here in 2015, I remember. I bought a lot of stock after we had seen this high retrace and meet back up here. That's just a sidebar. We saw significant gains over the last few years, 4, 5, 6 years or so, and then we saw deep correction. You guys remember back in December? Deep correction in the stock market. Bitcoin and other cryptos corrected deep as well, but then that rebound, we made higher highs, still making higher highs, and now rebounding again. Is this healthy or not? Are we going to continue seeing higher highs? I think a lot of this has to do with China and the US. Unfortunately, that's the key that we have to look at. But nevertheless, what could this trigger and how could that affect crypto? Well, since then, we have seen many big names rise, fall, and fall even more. In this article, we'll recap how the financial crisis of 2007-2008 unfolded. So they talk about liquidity a little bit in this article. Again, guys, I'm not going to read the whole thing, but I will link it in the description if you want to read it further. To keep recession away, the Federal Reserve lowered the federal funds rate 11 times from 6.5% in May 2000 to 1.75% in December 2001, creating a flood of liquidity. In the economy, cheap money, once out of the bottle, always looks to be taken for a ride. So they were creating liquidity out of nothing. People were putting the money into stocks, bonds, whatever they needed to invest. And then what happens down the road is when the stock market crashes, there's no liquidity. All that money is disappearing because people are losing money. It's going poof out of thin air. And so this is what causes something called a liquidity crisis. So just scrolling down here, the financial crisis of 2007-2008 has taught us that the confidence of the financial market, once shattered, can't be quickly restored. In an interconnected world, a seeming liquidity crisis can very quickly turn into a solvency crisis for financial institutions, a balance of payment crisis for sovereign countries, and a full-blown crisis of confidence for the entire world. This is why people invest in gold. And today, guys, this is why we're investing in XRP, in Bitcoin, in cryptocurrencies as a whole. But this also ties into XRP in a different way, a liquidity crisis. Could XRP be our saving grace in another liquidity crisis? Well, the idea of having XRP around so that one can source liquidity on demand could alleviate some of these pressures, right? Before, we didn't have that. And now we do. So some people are suggesting, if this happens, and we've heard it from people on YouTube, people on Twitter, the idea that cryptocurrency could save us from the next financial crisis. Not only will people be putting their money into cryptocurrencies to hedge their bets, maybe against fiat inflation around the world, but XRP's got that ace up its sleeve compared to other cryptocurrencies. It is meant to help source liquidity to get the world out of these kinds of jams. This Reddit thread here, back from, I believe it was December 2018, back when the stock market really did take a plunge and everybody thought that that was it. Hey guys, been following the economy very closely and studying up on the stock market and how everything is quite connected. Looks like there could be a pretty big sell-off, similar to Japan in the 90s, a massive crash. Now, when this happens due to fractional reserve lending and the huge derivative market, I feel as though the liquidity crisis we are about to experience is going to be absolutely massive. People thought banks were insolvent in 2008, and this is triple the problem or worse now. All these banks having access to RippleNet makes me think that once the crisis commences, these banks will be forced to flip the switch onto RippleNet and utilize XRP as a source of liquidity because, well, it's the only option. Guys, It's the only option, and we have no other choice but to take it because we're sure as heck ain't gonna leave it. Now, I'm not the most educated on this, but I feel like the amount of liquidity that's going to be needed is going to be well into the trillions, if not more, meaning XRP's price is going to be very high. These are just some of my thoughts, and then he goes on, a lot of people responding to this, again back from December. That's from the Ticket Police on Reddit. So guys, there is a lot that is involved with this. It's not so cut and dry. It's not so plain and simple. One thing I do know for sure is that people are going to start taking cryptocurrency a lot more seriously than they have been. I saw this on Twitter from Rhythm at Rhythm Trader on Twitter. Media on Bitcoin in 2010? What? From 2011 through 2015, basically, people were laughing. In 2016, Bitcoin was used by criminals. In 2017, Bitcoin is a bubble. In 2018, Bitcoin wastes energy. And in 2019, Bitcoin is a safe haven and digital gold. Buy it. Well, that escalated quickly, didn't it? The modern investor who rarely makes an appearance on Twitter did post a reply here. Just imagine what they'll be saying in 2021. Guys, I agree with this wholeheartedly. What will they be saying once this actually happens? Once the economy collapses because it's due for a collapse? We're seeing it before our eyes. Will XRP help solve the liquidity crisis because banks will not have a choice at that point? I know a lot of people are going to have opposing views on this. The comment section is open, so I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.